In the shimmering heart of Antwerp, where the Scheldt River winds its way through cobblestoned streets, a revolution unobtrusively began in the mid-16th century. It was not heralded by the muskets of war, nor the declarations of kings, but marked by the quieter, though no less consequential, exchanges of paper and promises. Here, in the bustling squares of this Belgian city, traders and financiers from across Europe gathered, setting the stage for what would become the modern stock market, an institution that, perhaps more than any other, has come to symbolize the pulsating heart of global capitalism. If history teaches us anything, it is that nothing about this phenomenon was inevitable. Like the most compelling sagas, the evolution of stock markets is punctuated with episodes of innovation, booms of prosperity, and specters of calamity, reflecting not just on economics but the prevailing human condition across ages. Few avenues offer a more vivid tableau of human ambition, scrutiny, and folly than the history of these markets. From Parchment to Pixel, their story is one of ceaseless reinvention, animated by the twin human impulses, fear and greed. In the mid-16th century, Antwerp not only boasted one of the world's busiest ports, but also innovated financial instruments that prefigured modern stock trading. Here, merchants and backers pioneered the use of bills of exchange, effectively creating a market for managing debts and liquidity, similar to contemporary stocks. Trading was not confined to goods, but extended to these financial instruments, effectively birthing the concept of liquidity in markets. The Bourse of Antwerp was possibly the world's first building designed specifically for trading stocks, its architecture encouraging open vocal trading, a feature of stock exchanges still recognizable today. Yet, as Antwerp's star waned due to Spanish control and religious politicking, the financial center of gravity shifted to Amsterdam. The Dutch, with their expansive trading empire, were quick to innovate on Antwerp's foundations. The creation of the Amsterdam Stock Exchange in 1602, driven by the needs of the Dutch East India Company, marked a significant evolution. It was the first company to issue shares publicly, an event happily coinciding with the broader golden age of Dutch commerce, enlightenment and expansion, the rise of the London Stock Exchange. The 17th century's Age of Enlightenment brought not only philosophical but economic revolutions. London, thriving amid England's maritime expansions, began to shape its own version of a stock market, which would later evolve into the famous London Stock Exchange, or LSE. Historically, British merchants gathered at Jonathan's Coffee House to negotiate share prices, a practice which eventually institutionalized into the LSE in 1801. Despite its relatively late legal recognition compared to its Dutch counterpart, the LSE quickly became a behemoth in global finance due to Britain's industrial might and imperial reach. This period also marked increased regulation and the codification of market practices, processes that were essential in gaining investors' trust and facilitating market growth. Public faith in the market was tested and tempered in such places, which saw the conceptual birth of modern financial journalism, aimed at both educating and assuring the burgeoning class of average investors. Across the Atlantic, Wall Street's ascendancy. With the birth of a new nation came the seeds of today's financial behemoth, Wall Street. Originating under a buttonwood tree in 1792, with the signing of the Buttonwood Agreement by 24 New York stockbrokers, Wall Street was poised to embody the American spirit of enterprise. In its nascent stages, Wall Street was quite parochial, concerned largely with war debts and bank stocks. But the completion of the Erie Canal and the resultant economic boon shifted its focus and scale dramatically, embedding it firmly in the fabric of an expanding country. This period marked the inception of what we know today as the New York Stock Exchange, or NYSE. Adventures and misadventures on Wall Street through the 19th century set the stage for its pivotal role in financing the burgeoning American industry. Its rise not only underscored the growing financial might of the United States, but also forecast the central role America would play in global economics in the century to follow. Technology transforms trading, the age of the telegraph and the ticker. The advent of the telegraph in the 1840s revolutionized communication and, by extension, stock trading. Information, that most precious commodity in trading, could now travel faster than ever before, essentially nationalizing the stock market. The creation of the stock ticker in 1867 by Edward Callahan further galvanized this change. bringing market movements into the offices and even homes of investors, fostering a new tier of market participants. With these advancements, the geographical and informational gaps between investors and their investments shrank dramatically. This era of technological innovation led to greater market efficiency, but also facilitated larger scales of speculation. Public participation in stock markets rose sharply, influenced greatly by the allure of real-time data, an early example of the double-edged sword of stock market technology. From great crashes to great wars, the history of stock markets is, in many parts, a history of its crises. The Panic of 1873, which started with the collapse of a major banking firm in Vienna, spread its shockwaves across the Atlantic, leading to the Long Depression. But perhaps nothing on Wall Street is more storied than the crash of 1929, a catastrophic descent that precipitated the Great Depression. This era illustrated the global interconnectivity of financial markets and their capacity to spread economic distress. It also led to significant regulatory responses, including the establishment of the Securities and Exchange Commission in 1934, aimed at restoring investor confidence and ensuring such calamity would not occur unchecked again. Parallel to economic tumult were two world wars, during which stock markets demonstrated remarkable resilience and adaptability, realigning with broader economic shifts and wartime economies. This resilience underscored the inherent robustness and adaptability of financial markets to external shocks. The boom of bulls and the doom of bears post-war transformations. Post-World War II, stock markets entered a phase of unprecedented expansion. The American economy, buoyed by its relative insulation from war destruction and boosted by the Marshall Plan in Europe, saw a surge in both consumer confidence and industrial capacity. This era was marked by a bullish embrace of equities, facilitated by technological advancements and a deeper, broader understanding of the market by the public. This democratization of stock trading, spurred by the development of mutual funds and later pension funds, edged more people towards investing, shaping a new financial paradigm. However, this period was not without its downturns. The oil crisis of the 1970s, Black Monday in 1987, and the dot-com bubble burst at the turn of the millennium were stark reminders of the cyclic nature of stock markets. Each crisis, followed by regulatory and technological adjustments, contributed to the shaping of a more mature, resilient market. Digital disruption, the internet age to algorithms. The late 20th century and early 21st century heralded the era of digital disruption, characterized by the rise of the internet. Suddenly, global trading was not just for multinational corporations, but could be managed from a small personal computer in a suburban home. The shift towards electronic trading platforms and algorithmic trading changed the velocity and volume of trading. These technologies allowed for high-frequency trading strategies that could execute transactions in milliseconds, driven by complex algorithms that analyze large volumes of data to make trading decisions. This digital revolution has not only democratized access to stock markets, but also introduced new dynamics and challenges, such as flash crashes and the debate over the souls of trading, given the increasing detachment of financial securities trading from physical and sometimes even temporal realities. Future visions, AI, and the frontier of financial markets. As we gaze upon the horizon of financial markets, artificial intelligence stands prominently, poised to redefine trading further. AI's ability to process and analyze vast datasets far beyond human capability presents both exhilarating prospects and ethical quandaries. The integration of AI in trading isn't merely an incremental change, but a potential paradigm shift, offering profound efficiencies and, possibly, new types of market behaviors. This could mean predictive capabilities sharpened to near clairvoyant levels, but also raises questions about market fairness, transparency, and the role of human judgment in financial decision-making. As we continue this historical journey from the bustling squares of Antwerp to the virtual landscapes of algorithmic trading, the stock market remains a mirror to our aspirations and a testament to our ingenuity, ever reflective of both our achievements and our excesses. As such, understanding its past is not merely an academic exercise, but a key to navigating its future complexities. As we close this riveting journey through the evolution of stock trading, from its humble beginnings to the sophisticated digital age dominated by AI and algorithms, We hope you found this exploration as enlightening and thought-provoking as we intended. The world of finance is ever-changing, mirroring the innovations and challenges of the times. If you enjoyed this video, please give it a thumbs up and don't forget to subscribe and hit the notification bell. You won't want to miss what we have in store. Thank you for watching. And until next time, keep looking forward, embracing the changes, and investing in knowledge.